So I'm Hank Thomas. I'm the CEO, founder of Strategic Cyber Ventures. We're a Washington, D.C. venture capital firm focused mostly on cybersecurity, but now we're doing defense tech and other things. To my left, I have Jennie Blumenthal, CEO, Corporate Rehab Leadership. I have that right? And we have Deborah Jackson, CEO and founder of Plum Alley. And then we have Sonny Vu, Chief Builder at Liminal, but don't let him fool you, he's also a VC. But he's like an accidental VC, but he's more of a builder. Thanks for joining us here today. We're going to save some time at the end of this for some questions, because I think hopefully there's some founders in the audience, or maybe people out there that are thinking about becoming founders. But we're going to get this started off with kind of learning a little bit about what everybody here does. And starting off with Jennie, what kind of companies do you work with in the space as they're building? And what are some things that they bring to you maybe a little bit too late and it's turned into a disaster for them?
So I'll give you a little bit of my background for context for that. So I'm an ex-corporate partner with PwC, where I worked on sustainable growth for Fortune 500s. Then went and started an AI startup, and now run corporate rehab leadership, where I really focus on the intersection of innovation, growth, and AI. So most of the founders that I talk with are really trying to nail their leadership story. Getting ready, the big thing I see them come to me with is, I'm ready to pitch. Introduce me to the VCs you know, and we go back to consulting 101 and problem solving 101 with really narrowing down what problem they're solving and clarifying their leadership story. So that's typically the biggest thing I see when I'm working with founders, is they're racing to try to get funding before they have a very clear story to tell.
Do that a lot too. Deborah, tell us about Plum Alley. What do you guys focus on? What do you invest in? How did you get into this?
Yeah, thank you. First of all, thank you for having me, and I hope everyone can hear. It's a little bit noisy, so if you can hear, okay, so we'll talk up as loud as we can. So Plum Alley, my company, we invest in frontier tech and medical breakthroughs. So we've invested $130 million so far in 33 different companies. We typically invest at the Series A level. We have 6 AI native companies in our portfolio. Frontier tech we define as robotics, autonomous, and electric freight vehicles. And prior to founding my company 10 years ago, I worked on Wall Street in investment banking at Goldman. So I have a lot of background in technology and raising money for companies. So very excited if there are founders in the room to share some words of advice.
Sonny, every time I talk to you, I learn something new that you're up to. So what are you, it sounds like you're doing a lot of building. Tell us about what you're up to from what you could share.
Sure, I can tell. My background, I've been an entrepreneur all my life. Original plan was to be in academics, but that wasn't to be. So done a number of companies, founded and exited 5 companies of my own. The one I think I'm most known for is Misfit Wearables, which is a wearable technology company sold to Fossil Group back in, it was 2015. That was a lot of fun. And have been investing and advising a number of companies from the family office over the last 10 years. And recently I started, partnered with Tomasik on Liminal, which is a group that was founded by Tomasik to build companies, to work with founders to build companies. In particular, we're focused on working with unicorn and repeat founders to build their next great venture. So we are a fund. I don't think I wouldn't call ourselves a VC, although we do invest in startups, namely the ones that we start with founders. And so, so that's what we do. We're a team split between Boston and Singapore. And yeah, working with founders to build their next great thing.
Excellent. Jennie, curious, what are some like market changes or behaviors you've seen over the year that break founders? Things that just like maybe is like the end of their road that people out here might want to avoid.
So this time last year, we saw a lot of folks trying to dip their toe in AI. We were talking about this ahead of time. I also do a lot of angel investing, so I hear at least 3 pitches every week for my angel investor group with Citrine Angels. And what we saw there were people saying, let me just add kind of AI glitter to what I already do. Now we're at the point where everybody is trying to be AI native. And so thinking about where you can actually gain speed and scale, and thinking about doing that in ways that actually really align with what you can do different than everyone else, as opposed to trying to be a good operator and then learn AI, and really being aligned there. So I see a lot of founders really trying to figure out how they can do that, and they're trying to be everything to everyone. They're hitting up any VC they meet, who, even if it's outside of their focus area, and not being as disciplined. And with where things are going with the interest rates we've seen this year and capital being a little bit more constrained, I go back to the basics of really be clear about the traction that you're solving for, be clear about what you've been able to do, and getting really dialed into that founder, into that customer, and being able to tell the customer story and align everything back to the problem you're solving for whom, and demonstrating that traction. And those who have really tripped up this year, I think, are chasing a little bit of the shiny penny, or squirrel, as it were, and not being really clear about where AI fits in their story.
Yeah. Obviously, you can't just sprinkle AI on something and make it work. That maybe that worked for a hot second, but that was the same with cybersecurity a number of years ago. Deborah, where are you seeing capital flow these days? Despite the kind of the market that we're in right now.
Yeah, it's been a really different market in 2025 versus 2024 and 2023, and even back to 2021. When in 2021, I think of those now as the go-go years, because if you had a legitimate idea and some traction, you could probably raise capital. Then we entered the moment of AI hitting the market, and so investors, and by the way, there's so much money out there. It's like mind-boggling to see the amount of money that's pouring into companies, particularly from big corporates like Meta and Google, Alphabet, et cetera. But what the change is really that there's so much potential around AI. So 60% of the dollars in venture last year flowed into AI companies, and much of that was at the later stages. So you think of the mega rounds that were done with OpenAI, et cetera. It's sort of a very interesting market. I think the market has bifurcated, meaning that you have the money flowing into the big LLMs, the big public companies, and then under that, you have the smaller, earlier stage companies under the radar. And we invest in that under the radar stage. So I think companies that truly have something unique, and especially around AI, that means you have to have proprietary data. You have to have data someone else doesn't have, be it healthcare data or some other kind of data. And you have to be able to show that the value is there. And so, just tacking on, I'm an AI company or I'm using AI is just not going to cut it. Everybody can see through that. The real value is coming from entrepreneurs and scientists, inventors that are really able to see what could be in the world. And it is really a very exciting time. Capital is out there, but you have to be very smart and very focused about how you present yourself.
Sonny, thanks, Deborah. Sonny, you've built through cycles. What seems healthier about this cycle? Not to lead the witness here, but what seems healthier about this cycle than maybe other cycles in the past? Or if you don't think it's healthy, you could talk about how it's unhealthy.
Yeah. So, what's healthier?
What's healthier about this investment cycle? What's the positive? What's the bright side?
Yeah, it's well, first of all, I'll just say this about AI, okay? And I challenge a lot of my founder friends to, whenever you do a deck, see if you can do it without using the words AI, machine learning, or agents. And if you can tell a compelling story doing that, then I think you're onto something. And if people say, well, don't you use AI? Then you can always respond and say, well, yeah, we use computers. We use electricity, right? It's 2026 now. I was about to say 2025. So of course we use AI. It's like, do you use email? But it does feel like 1993 of the internet. I remember waking up in 1994 one morning, and I thought, oh my gosh, we're so late. We're late. The internet's passed us by. You know, ridiculous. You know, of course that's not the case. You know, we are just at the beginning. This is nothing. You know, 1993. We still have decades to come, and if there's a crash, there's a crash, and then there will be all this data center and power ready to go. Just like the crash of the .com. After that, guess what? Fiber, broadband, mobile internet, all cell towers, 3G, all of that was in place for the late 2000s, for the boom of the 2010s. So if it's not the next 5 years, it's going to be definitely in our generation of science. It is definitely the most interesting time to be in, and there is a plurality of things to do. And my favorite areas are to think about the things that humans should not be doing. You know, regulatory filings. Those are documents that no humans should have to write. No humans should have to read, right? But you got to have it. And so I think, you know, regulatory tech, boring, but oh my goodness, how important, how transformative AI will be for that.
What about dangerous jobs? Like, do you think no human should have to do dangerous jobs? Is that a
dangerous
things?
Oh, yeah. So one emerging thesis that we have at Liminal, our venture studio, our team that builds companies, is hostile robotics. Okay, it sounds bad, but it's really getting robots to do things in places that humans should not be. Welding stuff underwater, cleaning tanks, tanker trucks, you know, because it's dangerous, or washing windows, skyscraper windows. There's, you know, of course robots should be doing that kind of thing, and of course AI should be what's training the robots to do it.
Exciting stuff. Jennie, tell us about some things that when you work with young founders, that matter more than metrics, attributes that ultimately VCs care about, that are more important than the metrics, that you work with them and say, like, hey, these are things you need to polish, these are things you need to work on.
Well, that are important to founders or important to the VCs?
That founders need to do to be attractive to VCs. Yeah.
So one of those things is mindset. I see a lot of people come to a place where they're leading from what they do best, but they are encountering a place where they kind of get to a situation where they think, I don't have the right contacts, I'm out of my league, I don't have the depth in AI, whatever that might be. And really that starts to impact the risk, essentially, of the investment. When we think about it from a VC's perspective, they obviously expect you to come to the table stakes of having the traction, having the team. And if you don't actually have that vision for where things are going and what you can be doing and where you fit into that and your own set of weaknesses or self-awareness, that's where I see a lot of founders really having to work on as they get later in the stages. Because VCs, if you think about it, and I'm sure my colleagues here can validate this, it's a relationship. It's a business relationship, but it's a relationship. And at the end of the day, if you can't actually articulate where you're going and really have the wherewithal to lead your team through all the ups and downs, you're a risky investment. And so that's really where I see a lot of that mindset making a big difference.
Yeah, especially if, like, I see a lot, if it pops out quickly, if someone is really more focused on raising the next round and not talking about revenue, more about how the next round's going to look like, that's a huge red flag. And I was going to ask you about that, Deborah. Like, what are some ways that you could kind of see through maybe like some temporary traction issues versus a more systemic problem with the business?
Yeah, that's really, really an important question. So we have found, having looked at thousands of founders and companies, the best founders are the ones that see around corners and see something that we don't necessarily see. They have conviction that can exist. And then number two, they can articulate it and sell it or convince us in a way that it's feasible. So that doesn't always happen. It's 1 in 100. But when I meet a founder like that, it gives me chills up my back. And I think, oh my gosh, this is an extraordinary founder with a vision. Then number two, it's always, okay, is this essential or is it a nice to have? Companies that typically survive and do well and raise capital are things that we absolutely need. think of autonomous and electric freight vehicles, et cetera. So, and think of breakthroughs in medicine like CRISPR gene editing. So you want to see that there's real value in this company, real potential value. Then the next stage is really thinking through, okay, can this founder make it happen? Can they raise enough capital? Are they able to attract the right talent? Because typically the founder is not going to be the person who's running the company day to day. And then just, how adaptable are they? Every day something changes in the field, changes with your competition, changes with the big LLMs or the big public companies. So you've got to have a founder that not only sees something, but has vision around everything else that's happening and knows when to adjust. There's not a founder that we've invested in that today is exactly the same strategy or the same product that they started with. And so you're really counting on that founder to have the ability to navigate, to learn fast, to assimilate information, and to adjust.
A little bit of emotional intelligence, kind of like read the room. And there's a lot of founders that aren't that good at that. So that if you can have a technical person that's also has that baked in, I think super important. Sonny, so what are some things right now that you think that it's still trendy to over-optimize in pitches for founders, but is really just discounted by VCs? They don't really care about it anymore, but you see it in a lot of pitch decks. AI?
No. I mean, let's see here. Over optimize things, right?
Talk about it too
decks.
much. It's too.
First of all, I just want to say that I love what you said about being able to tell a compelling story. I think that's key. And what you're saying about being able to look around corners, that's also essential, I think, as well, because we want to be working on things because, as they say, as a famous person said, competition is for losers, right? And not doing things that are different and doing things differently, I think, is key. I think a lot of decks have way more words and information than they need, and I think a lot of decks fall in love with the solution instead of the problem. And if I had to say one thing, it would be, I think the vast majority of people undersell the problem. I think if you can really be convincing around the problem, I mean, if you have a 16-slide deck, I would spend 6 slides on the problem. Not, the market is big, blah, 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 but just make it a really compelling, wow, that is a big, inevitable problem, and it's getting worse. If you can, and then you can pause. And then it's like, so do you have a solution for that? Well, I think so. Here's what we got. Okay, but that's actually not enough. I think you should we also have this, because the next problem after this is this. I think that kind of narrative arc has, it's worked for me at least. I don't think there's a one-size-fits-all, but I think over-investing on the problem statement, and it's not about being more detailed, but just making it obvious that this is an inevitable problem. I think that's the new hashtag these days, is inevitable, right? So I'm just going to go along with it. So I would say that would be the thing to over-optimize on.
Focusing on the problem.
It's under-optimized right now.
Yeah, under-optimizing that. Yeah, that's a big one, because obviously that's going to be what dictates market traction is solving problems, whether it's like a fun problem, a nice to have, or like a serious problem. That's really what this is all about.
And it's usually something really specific. The more specific you can be about the problem, the better, I think. Where it's like, oh wow, and then if you can guide the person narratively through and imagine when this happens, then it's a bigger problem. Yeah.
So Jennie, let's go back to some. I like to focus on things. We're talking about a lot of really early stage stuff here. What are some things that people can, be more self-aware? Founders can be more self-aware. What are some things you see, if you were to aggregate all the things you see early on, that would be truly a signal that there's going to be problems down the line with early stage people you work with?
I think I'll tie back to what Sonny just said of solving a problem that people aren't willing to pay to solve. It could be a great problem, but if your customers don't want to pay to make it go away, you don't have a problem that's going to be in it for the long haul. And then the second piece is we try to cast a wide net sometimes as founders that I've got this great problem, we can do all of these things, and then we start telling too many of the stories of all of the different ICPs, ideal customer profile, we could be going after, all of the different solution sets, and we try to build too many things too fast, and it gets confusing in the market. So I see that a lot with early stage founders. So much of my coaching and working with founders is go back to the basics. What problem are you solving? Totally agree with the slide deck of spend more time on the problem than anything else. Convince me it's a big problem, people will pay to solve, and that there's a huge TAM, target market for it. And then go into something that you solve really well. You can walk me through your customer's shoes and tell me a day in the life and tell me where this problem comes up. You can anticipate what your customer is going to feel next and get ahead of what that is, like Sonny said, of here's what's next in our product roadmap. I want to hear that you are living and breathing your customer story before you add on any other customers, before you add on any other products. That's all part of the vision. That's all part of that slide 17 that Sonny said of what we're going to do next. But first, nail the basics. And if you can show me traction and that you've got a vision for where this is going to go, but you have a repeatable traction that's very believable, that's where I really see those founders are going to make it.
I've seen two things that come to mind for me there is building for a customer, but I've also seen people that have built for one customer and then it was totally customized for that one customer. And so you got to also pay attention to the fact that it's going to scale and it's not being customized and highly customized for one particular.
That's actually a great point. Actually, I'm going to add one piece to that. One of the biggest skills I think we're probably going to hear about at CES, I hope, is the fact that we have to be constantly learning. We're unlearning and learning. I think the three of us, as we said in our prep, we are completely optimistic about where AI is taking us, but it requires us to constantly let go of old ways of leading, of old ways of doing tech. We're not in, system lifecycle development anymore. Agile isn't even part of this anymore. We're really in a place where we have to embrace new ways of doing things. And what that means is really be ruthlessly prioritized about what your customer needs and what the problem is, but be ready to unlearn and pivot when you see something else changing in the marketplace. Don't be so in love with the solution, as Sonny said, that you can't let go if something else needs to change.
The first product I built, our first customer was Bank of America, and we built it very much for Bank of America. And then somewhere into about a year into it, I was like, we're being used. We're being used to build this exactly for them, and no one else is going to care about this, so we had to pivot fast. Deborah, what's a way that founders can build, what are some ways that founders can build long-term trust with investors? Grow and make money?
Yeah, the most important thing is to reactively manage your relationship with your investors, because your investors were early believers. And as a founder, you're not going to have a steady, clear path. So there are going to be those moments where you have to go back to your investors and say, hey, we didn't meet that milestone, or that's not working, we need to change entirely, or we've run out of money, or we've lost our chief digital analyst. So it starts from day one to build up that trust and to have human conversations. Yes, there are those days where you have to report numbers and show progress, etc. But you need to share the hard stuff, because there is nothing worse than an investor thinking your company's doing well, and then they get a shot out of the dark that are running out of money or whatever. So you have to think of it as a partnership. And by the way, the partnership works two ways. Not all venture capitalists are, in your corner, despite what they may say, and they have their own agenda. So you have to, it's like any human relationship. It's a two-way street. So you give and you get. And I would also say, like on the whole pitch deck and everything, always just be simple and clear. I cannot tell you the number of companies that have come in to present to us, and they present for 15 or 20 minutes, they walk out of the room, and the investment committee we all look at one another and go, what the hell does that company do? And I always think if we cannot describe to each other and to somebody at a cocktail party, oh, I just met a company that's doing this, there's no way they're going to invest in you. So keep it simple, boil it down. What do you do in layman's terms? What is the value? Who is your customer, and why will they pay for this? Very simple things.
I think the secrets are terrible. So like, not keeping secrets from your investors is a really important thing. And then my industry, the cybersecurity industry, is really bad at the storytelling part that you were just talking about. You go to like some of these bigger cybersecurity conferences, and it's just a sea of things. Everybody thinks they're highly differentiated, but if you're an outsider coming in, you have no idea how one thing's different than the other. It's a very bad differentiation, and it really needs to be a simple, like you talk about an elevator pitch, you need to have an elevator pitch that you can use on your least technical friend, relative, whatever. Sonny, what are some signs that founders know how to allocate capital early within their business versus just know how to fundraise? They know how to spend money wisely. What are some things you look for early on in that instance?
Signs that founders are allocating capital wisely. Well, the top sign is that they're performing, and that's kind of all that matters. I'm sorry, but a bit more nuance on that. First of all, what's the most important skill or the most important role for a founder to have? What do you guys think it is? What do you think it is? Emotional intelligence. Spending money. I'm sorry? Wit. Okay. And passion. I heard passion. Okay. Well, I'm gonna say like the top. I think the top most important skill is sales. Okay. Because you're constantly trying to convince people to join you for absolutely no job security. You're trying to get partners to partner with you when you might not be around for 6 months and they don't know it. You're trying to get the media to say nice things about you when there's nothing to talk about. You're a nobody. You're trying to get investors to invest in you when you have nothing yet, a pitch deck, okay, and a vision. And you're trying to get customers to buy stuff that doesn't exist. That is constantly what founders have to do, whether you like it or not. It's not just about customer sales. So the person who is allocating capital wisely, I think it's the one who is delivering on sales along that plurality of dimensions.
Yeah, I mean, if the founders aren't leading the sales and they can't learn how to sell, even if they're a technical person, they don't know how to sell, like the probability of success is very low for a company.
It's almost like this job that you're going to have whether you like it or not. And not everyone it's cognitive dissonance for a lot of people for a fairly long period of time, and the shorter amount of time that you have that dissonance, the better. Because whether you like it or not, that's what you're going to have to do. If you're a designer, you're not going to be designing all day long. You're going to be trying to convince designers to work with you, that kind of thing.
Well, that time flew by. We're at we have 9 minutes for questions, so it seems like a pretty active audience. We'll open up the floor to questions if we can hear you. I don't know how loud it is out there. It's pretty loud up here. So, she's got the microphone. There we go.
Thank you very much. So I'm looking right now for some seed funding again. So I found it in the past. Can you hear me?
Go ahead.
Okay.
Yell at me.
Perfect. So I'm looking for some seed funding again. And I basically have two issues. The first one is I want to develop AGI. And if I want to sell AGI, then usually the VCs are like, yeah, but what actually do you do with it? What is the problem? On the other side, if I then make a concrete product in which AGI is, then VCs say, yeah, okay, but you could do so much more with it. Why don't you go bigger? So how can I solve this issue? And the second one is I need a team, but I also need money, and both needs each other. So how can I solve it that I both need before the other one?
So people are never happy. Your investors want you to do AGI, but then they want to know why they're using it. And how can he afford a team when he has no money? Two parts.
Investors want you using AGI, but he can't afford it. So
It's like telephone.
how does he get around that? His investors want him using AGI. Is that correct?
Want him to develop But then some are unhappy. What is the use case for it? They want to know more. And the second part is, how can he afford a team when he has no money? So the chicken and egg thing.
Yeah, okay.
Okay, so
Use AI.
it comes down to fundamentals. And as a founder, you have to say, am I truly an AI company? Do I need AI, or am I building AI? So the best companies are building their own AI, and that is to help with coding or any other functionality. So if you're not truly an AI native company and you're using the tools of AI, then you're vulnerable. And so my recommendation would be to really decide where you fit in. If you're not really an AI company and you're bringing value to the world in a different way, maybe you're an energy company, then focus on that. But it comes down to, where are you bringing value? And how are you unique? Or what is special or proprietary about what you're doing? You can bet that the major public tech companies are going to dominate so much of this. They already have the models, they have proprietary data, and they are going to be building on top of that, and they're going to own that. Similar to the App Store controlling all the apps that people created. So you have to be very, very clear on where's your value, what are you bringing to the table, and why it is so special and unique that you are going to be successful and have a moat, or have some type of proprietary information or IP or something. So that's what I would say.
You could talk after this a bit if you have.
I'll just add one quick thing to that. I think your second question is the answer to your first. I mean, figure out what your investors are really asking of you. Do they want cost takeout? Do they want you to prospect better? What business problem are they asking you to solve with AI? And if there's a bot that can do some of that, whether it's taking cost out, doing something efficiently, and that's going to help you, then you don't have to actually hire a huge sales team and take on those costs. But I totally agree with Deborah. Start with what you do well and figure out why you're doing it, and then add AI on top of that strategically.
Hey, next question. She was the first hand up I saw.
Hi, my name is Asel. I run a female founders community. I have a question regarding female founders. You know that statistically just 2% of VC money is invested in female founders. Having two of this magnificent panelists female in VC, why do you think is that, based on your experience with female founders, and what do you think should be done to increase this percentage of VC investing in female founders? Thank you.
Okay, I'll take this question, since all of the companies that we've invested in have at least one female founder in the founding team. They're majority men, but we do care about diversity, not only of gender, but diversity of age, diversity of background, diversity of perspectives. The data shows the more varied people you have in your executive team, the better the outcomes are. And I think it's just a business fundamental, and I think it's an advantage. So, one of the challenges is you often see companies that are, same kind of definition of founders and perspectives, and they build a product that they all want, and then they take it out into the marketplace and it flops. So you can preempt that kind of problem by early on bringing in different perspectives. And the best companies we've invested in have had people who, in the executive team along the way, who said, hey, our customer's not going to buy that. That's a great thing, but no one's going to buy that. So you can see it, and age is really important too. I can't stress this enough, because you look at the data right now, some of the most successful early stage companies are founded by people 50 years and older. And there's such a focus on youth and new technologies and coming out of Y Combinator, et cetera. But look beyond that. Dig a little bit deeper. And you can see some of the more experienced people that have credentials, have sales chops from many, many years in industry. They're actually, really performing at this point.
Good question. Over here.
Thank you so very much. Hi, good morning. Yes, thank you. So I'm Sharon Zhu from San Diego. I have technology, business, and governance policy background. I want to say that I'm very fortunate that last year when I was planning to transfer my previous traditional superfood small business during transition time, I was very fortunate that I was able to file for pending patent. They are all related to AI infrastructure and multimodal. And I strongly believe that they are tech ready, technology feasibility ready, policy aligned. It's all aligned with the EU framework and also the American AI Act policy agenda. And also they are all built, the 4 pending patent are all built on my past years of the first principle problems. They're all from the first principle experience and accumulations. So you can feel, my question is you can feel my emotion because I want to persuade, because I almost use up all my self-funding. I'm self-funded founder. So I want to lock the VC level investor and also or the tech venture arm as soon as possible but I don't want to, because my first time to raise the money to achieve the pending patent, I want to have a clear, effective, empowering, and powerful roadmap so I can lock the money to achieve the 4 pending patents soon to help the society to resolve the problem. Thank you so very much.
Could you summarize the question for us?
The summary is complicated. No, you're a first-time founder, and then how do you self-funded, running out of money? No?
Money is, I have 4 pending patents regarding to AI infrastructure. I believe they are all tech ready, policy ready, and a business based on the real problem. So can you please give me a real roadmap so I can lock either VC investor or the tech venture? Or give me a reference. Thank you very much.
Roadmap to raise money?
She has patents pending. She has patents pending, and these are roadmap.
Yeah. Okay.
Roadmap to raise
She has patents
money.
pending. She needs a roadmap. But what's some advice for her? So it's just kind of like some patents, but without any customers so far. No customers.
Do you want to comment on how that patent office is doing?
I can tell you, from my perspective, like if somebody is just at the patent stage, it's typically too early in our industry to invest unless they actually have real conversations with people that are leading to an LOI or something like that. Preferably actual revenue, very early revenue, at least one person paying for it. But there are investors that invest a lot earlier. Patents, it depends on the industry. In cybersecurity, a lot of times you don't want to have a patent because then you're telling the world how you built your security. But other industries, it matters a lot.
I was going to say, I would go for friends and family and angel first and prove out the traction and have something to show, to your point. The angel group that I'm part of, we want to see about $200K in revenue for a 25 to 50K check. That's the reality. So you want to have at least a path towards that, and having the patents is a great first step, but the reality is you want to try to have some demonstrable revenue before you approach any VC.
It may go back to that sales. We're all salespeople.
I mean, it does depend on the industry that you're in, I mean, if it's like software and CE, okay. But if you're making a medical device, it's going to be about clearance and data, that type of thing. So the answer is conditional on the, But I will say this, we're in the last stretches of our session, but I just want to say one thing. For a while, I was getting a bit of AI anxiety. I'm sure some of you can relate. It's like, oh man, I have to learn all this stuff now. And I was actually working on this on my PhD in the 90s, so I was like, man, I should really know this. But I will just say this, we had the internet, we had the mobile, social AI now, right? There's going to be fusion and all this great stuff. But I would say one thing that's recurring over the last several decades, and it's that, and I'll just leave you with this. I think once-in-a-lifetime opportunities happen all the time. We just have to be ready for it, and I think that's the daily discipline is to be ready to identify those opportunities and to jump in and do something and build and not just talk about it.
We have time for one more question.
Thanks for your session so far. A question for all of you. How many pitches do you see a year? How many do you accept? And for those that you don't, how many do you stay in contact with?
I guess everyone has different levels of deal flow here. We invested in 2 companies last year. I have no idea how many pitches I saw. I'd say 1 a day, 300, something like that. What about you?
I had 30 pitches and made 5 investments, and I'm in touch with all 5 plus 3 that I didn't invest in to see what I can do to help them get connected to other investors.
We had probably 800 different inquiries. Our junior team weeded through that, and we actually met with about 200 companies seriously and invested in 9.
Let me just answer a slightly different question that hopefully the answer will be helpful for, and that is, what is the best way to get a lead into to get a pitch to really get attention? I believe the gold standard is a superstar reference from a superstar CEO of an outlier performing portfolio company. Like if I get a referral from Carl Pei from nothing, and he says it's awesome, doesn't matter. I'm going to listen to it and make everyone listen to it. Okay. If I got the referral from a service provider, I might actually red list it or blacklist whatever. I might be like, oh wow, they need a lawyer to introduce me to that pitch. Probably not, not a resourceful enough founder, not connected enough or whatnot. If it was another VC, somewhere in between, So service providers, other VCs, star founders in my own portfolio. I think that's like that's how I would rate it at least.